today we're going to be looking at an income statement again. This time you'll have a chance to participate in that through this Edpuzzle. So let's get started. Okay, so we have an income statement here from Company A, and we're trying to find the EBITDA, the EBIT, EBT, net income, retained earnings, just like before. And so we start off with net sales. This is how much money we made just by selling our product or service. And there are some costs, of course, that went with that in order to make money. Normally you guys spend some money. And this is money that was spent on product pieces to make our products, supplies, inventory, the people to make these services or products happen. All these costs get taken out. So net sales minus the operating costs is how much we have after we take those direct costs out. Now we're not done yet because this is earnings before interest, taxes, depreciation, and amortization. Okay, so we're going to go ahead and add up depreciation and amortization. Again, depreciation, our building is, or maybe we have a factory and our equipment is depreciating. It's not worth as much, and we're also paying toward our loans for maybe this equipment. So that is going to be coming out of the money that we have available. So this equals, all right, we have 118,000 minus, oh, what am I doing? Sorry. We have the 43,000 plus the 10,000. That's my depreciation and amortization. And so now my earnings before incomes and taxes, but having taken out depreciation and amortization, equals my EBITDA minus depreciation and amortization, 65,000. Sweet. So this is earnings before interest and taxes. So we still have interest and taxes to take out. Here's my interest. I'm paying on those loans, so I'm paying interest as well. So we got to take that out. So let's take EBT, which equals 65,000 minus the 6,300. And so my EBT, earnings before taxes, is 58,700. But what if we want to know what our income is without taxes? Right now, corporate tax, 21% across the board. So what we're going to do is we're going to press equal. And we're going to calculate the taxes on my EBT, okay, earnings before taxes. And then we're going to multiply by 0.21. And honestly, this number can be a little bit different than this. We're oversimplifying things a little bit, but until we have learned more about corporate taxes, this is the simplest way to calculate as an estimate. Okay, so this was 12,000 out of the 58,000, so we got to take it out. So we had 58,000. We lost some tax. Well, we lost money because of taxes. We have $46,000 left. Okay, now this is net income. So we're done with the EBs because this is earnings before, earnings before, earnings before, but there's nothing before now. It's just net income, but this is before preferred dividends. And so we're going to take out what we promised to pay our preferred dividend holders or preferred stockholders. So this equals 46,000 minus 1,000. Okay, so this is my net income, the profit. But of course, this is a corporation, and so the people who own stock want a piece of the pie. So we've promised to pay them some dividends. You don't have to, but we did, and so it's $8,600 that we have promised to pay. So we got to take that out of what we have earned. So net income minus the common dividends gives me my addition to retained earnings. So this is how much money we're keeping as a company, not returning to the stockholders or spending on other things. We're keeping it, and next year we can choose to reinvest this money. We can choose to maybe we decide to take out another loan and then hire someone with this money to start a new product line. So there's lots of things that we could spend the money on, but this is money that the company has decided to keep in the company. So anyway, that's it. If you guys have any questions, feel free to send me something through email or just ask in person if you're here at school. And If there's nothing else, then I'll see you next time.